Hello traders, the title of this video is how to perform a full Monty accurate Elliott wave forecast or analysis. Alright, so the financial instrument that we are looking at today is AMD, Advanced Macro Devices, one of the competitors of Intel. Alright. Alright, so here we are. So we want to perform a full Monty accurate Elliott wave forecast or analysis. Okay, so I may use the word 360-degree, okay, accurate Elliott wave forecast or analysis, or a fully fledged Elliott wave forecast analysis. All right. So looking at this stock, you see that there were a kind of messy trend here, all right, with the trend, all kind of price move, okay, and after 2000, okay, tech bubbles, the price went down 1, 2, 3, and there was this support level that I want to highlight to traders. So this is the 2000 tech bubble if you're in the stock market, followed by a zigzag correction, 1, 2, 3 with another move down. So in fact, what has happened here? So this first move, 1, second move here, and this one has been divided. You see 1, 2, 3, 4, 5. All right, it's a zigzag pattern, and that correction has ended here. I'm going to put a warning line there. I need to remind traders that this video can go up to 30 minutes, even more. But I will try to keep it short and not to repeat myself too much. But it's an essential tutorial, so we will go through everything correctly so traders can learn from it. So after the corrective wave here, people were expecting a trend. You can see that trend did not go above, okay, the high of the prior trend. So we can call this one like a next wave followed by another, okay, prolonged correction. So there was this move down after the X wave, or this move down followed by again another triangle. Okay, you call this one a triangle, up and down, but this is not a triangle here as such. The reason is I don't want to call this one as a triangle as such, is that after that 2000 tech bubble, AMD stock, Advanced Macro Devices, all right, something to do with Ryzen, all right, completed that zigzag pattern, and the X wave, all right, after the X wave, the price pulled back again, but this time it went below that orange line. It probably do that, and after it went below that orange line, all right, almost at $1.61, there was this move up here. You see. So what is going to remind of a lot of Elliott wave traders? They were thinking that at this point in time, the WXY wave is completed. First part of the correction, the X wave, and this correction here. So if I color that one also, color that vertical line into pink, people were thinking that a new trend will begin right here. So when they start counting first wave, okay, the wave count is dynamic, one step at a time, but behold, the second wave that's supposed to be the second wave has canceled that is supposed to be the first wave. So when the second wave cancels the first wave, which means comes to the beginning of the first wave, we might restart counting wave. This is about the Elliott wave count guidelines of 24elliottwave.com. All right, so we will start. So now this is our new first wave, and we are now in the second wave. Is the second wave finished yet? Is it going to go down more? That is the question. But one thing is very interesting in this scenario, contrary to this session here where we were calling this one first wave, you can see that this time we have a surge in trading volume indicating the signature of the bull. The smart money was buying AMD stock. You see this volume here, surge in volume, and the RSI indicator, okay, went above the previous peak. Can you see that? Signaling to us that this is a maximum momentum expected at this point in time. But we don't want to rush, yes or no? We don't want to rush. So there are many indications telling us that AMD has a high chance to begin a new trend at this point in time. The volume surge, the RSI is exhibiting a new peak, all right, and many years of correction since 2000. In fact, this stock was in a corrective phase. A gigantic WSY wave is completed. A first wave has been cancelled. A new first wave is now coming out. What's going on? What is the future for this stock? All right. Now, that's why I'm calling this how to perform a full Monty accurate Elliott wave forecast. So now we will try to use the information that we have today to forecast what is likely to take place. Now, one very important warning. The forecast is an expectation, all right? The price does not have to complete to fulfill our expectation. The price will not start a new trend if the fundamentals are not solid. It will not happen whether we forecast it accurately or not. It will not happen without the market sentiment, a solid, a bullish sentiment in the market in general, looking at the S&P 500 at this junction. So if the S&P 500 start coming down, or Apple start becoming bearish, or the market leaders of NASDAQ 100 becoming bearish, AMD will not go anywhere unless they are creating excellent products that are gaining more market share, and they are making a lot of money in a bearish environment. All right, very, very important. So those are the things we take into consideration when we are talking about how to perform a full Monty accurate Elliott wave forecast. All right, so now we're going to use the structure of the first wave. This is supposed to be the first wave. So far, at this point in time, we can call this one first wave. But if this move that we are calling second wave happen to come back down and cancel it, that will nullify this first wave again. So our forecast, we will bin it, so to speak. We will just bin it if they cancel this first wave. But another thing that you need to understand, all right. Another thing, oops, this is what I want to show you guys. All right, we go back again. Okay, now, apologies, traders. Now, this is a video I recorded earlier on. Now you know about it. All right, so now another thing that I want to show traders here, I know a lot of traders may be analyzing this stock at this junction, is that sometimes, because our guideline says that if the second wave, cancel the first wave, we must restart counting the first wave. So, all right, like we have seen a few years ago for the dollar yen. Some traders, they disagree with that guideline. They say that as long as the second wave did not go below the first wave, it's still a valid first wave. I don't accept that very much. The reason is that if the bullish traders, the smart money, is buying to hold and to create a trend that will remain in place, they will not cancel it. They will fight to defend it and keep it in place. So the reason is that I recommend to traders to pay attention to the cancellation of the first wave and to disregard that first wave is because of what is going on behind the scene. But there are other Elliott wave traders who do not understand things as we do. So though we say that this has cancelled, other traders, this is it, going to the mind of others, are still calling this first wave. Though we do not call it first wave, just when you are doing your forecast, this is what we are talking about, a full Monty accurate Elliott wave call means that you will also go into the mind of other traders. So other traders, though we are discounting this as a first wave, other traders may still hold on to that and call it their first wave. So I'll leave it there green, and they will be calling this one now. We call it this one, their second wave, which we do not. All right. I use a green color for those traders, and those traders will be saying now that this stock is now in the third wave. And probably they will be saying that that third wave will be a complex third wave, which will be subdivided into 5 minor wave up. All right? So those are the things you are take into consideration when you want to perform a full Monty accurate Elliott wave forecast or analysis. You want to go into the mind of other traders. So remember, there are some traders may call it first wave, second wave, and they are thinking that it's the third wave. And it's a messy situation, and it can throw traders in all directions. But to avoid all kind of mistakes, all you do need to do, if you see that there are other traders may mess up your trade, concentrate on the market pattern. So if it's going up, it will be in a rising channel. So you will be connecting the dot, draw your trend line, draw your channel, and do not violate the market pattern. And those people will not mess up your trade because you are concentrating on the market pattern itself. Will that be good for you? All right. So another thing that we need to say to traders at this junction is that, as you can see now, we say first wave and we say second wave. One of the mistakes that we don't want to do is to assume straight away that the second wave has ended here because of that doji there. We are a monthly chart that candlestick bar is not yet closed. It will be closed at the end of April 2018 because today is the 15th of April 2018. So it's not yet closed. So it's not a fully fledged doji yet. All right. In fact, today I recorded a video about candlestick trader explain the phenomenon of doji candlestick bar. I will be posting that video at Day Pro Traders. So make sure you watch that video so you may understand why I was saying to you to pay attention to that doji there. It's not yet closed. So one of the mistakes to assume that the second wave is completed here and start buying and expecting the third wave. But the good news is that we have a surge in trading volume. You see, for many years, can you look at that? So combining the Elliott wave principle and the trading volume, this is a surge in trading volume above average. For many years, we never seen any surge in trading volume like this. We are having up to 2.2 billion shares be transacted in AMD stock. Very interesting. Very, very interesting. So the surge in trading volume is telling us that there are huge trading activity, and the first sign is a bullish trend. Now we want to be very patient and catch the third wave like a pro. So one can be a little bit patient. Say, all right, I'll buy above the high, break a bull, retest above the high of the supposed to be the first wave. Or I will be very, very patient and look for a bullish trend setup above the high. Or some people with a deep pocket will say, George, well, I'll use option. I'll buy call option. I don't worry about losing the premium of buying a call option. And I'll keep my fingers crossed, my arm crossed, and my head crossed. And I'll close my eyes and hopefully everything will be all right. But the point I want to make here is that looking at the S&P 500, one needs to be very, very cautious now, because if the S&P 500 start becoming bearish or other market indicators or market leaders start going into a corrective phase, then AMD will be under pressure unless they start making a lot of money when everybody else is bearish. Then they will be back, back in the trend. All right. All right. So what do we do at this junction? What do we do? All right. Another thing I need to mention here is that though we are calling this the first wave, the next mistake that we don't want to make is that sometimes the first wave can be extended. So we are calling this now the first wave, which is normal. It may not be the end of the first wave. The first wave may be extended instead of forming 1, 2, 3, 4, 5 impulse wave. Then our first wave may end somewhere else here instead of here. So though we will use what we got today, we need to understand that the first wave can also be extended. As I mentioned to you, this video will be up to 30 minutes or more, all right? Because we want to do what we call a full Monty accurate Elliott wave forecast or analysis, which means we don't want to leave any stone unturned. This is what we are doing now. The next thing we want to do, all right, is that now you see you call this one a first wave, you're expecting a third wave, isn't it? All right, you're expecting a third wave. The third wave is the most important part of a trending phase, all right? But that third wave may not take place if, all right, the fundamentals are not solid. So it makes sense. It is also prudent at this junction, as we are trying to perform a full Monty accurate Elliott wave forecast or analysis, to go to Google Finance to check the economy news relating to AMD. Check their peers, all right, especially Intel, the competition. Recently, there was some bad news for Intel because Apple's computers were saying that they're going to build their own chips for their MacBooks, their computers, and so on. So that's not very good news for Intel. Yes or no? They're going to lose a bit of market share, all right, because they were providing all the chips for Apple stock, Apple computers. Now Apple computer was saying that they're going to build their own chips. So Intel is a little bit under pressure. Will that be beneficial for AMD, which is a competitor for, all right, Intel? So it makes sense at this junction to go to Google Finance to check the fundamental, to check the economy news, perform Google Assistant, check the balance sheet, check the financial about AMD, what's going on. Okay. The Google Assistant, we want to know, do they have a future, a brighter future, all right? What is the future holding for this stock, all right? So a bit of fundamental analysis at this junction is very important before we even begin, okay, fundamental analysis. Remember the trading triangle, the market first, the sector, next 100, before the individual financial instrument, AMD itself, without ignoring the market leaders, the economy news, and the fundamentals. Have I said enough? Good. So traders have been following before and say, George, I already know this, but I'm speaking to new traders now, so allow me to do that, please. Okay? So now we're going to begin after we have done all this, okay, like a pilot about to take off. We check the weather, everything else. We've done it now. Now we're going to look at the structure of the first wave, because we talk about the fractal pattern, you know, we can use the structure of the first wave, which is the signature of the smart money. All right? To determine, to use that to forecast, technically speaking, all right, the Monty wave. But understand, again, one more time, that that first Elliott wave can be extended and become 1, 2, 3, 4, 5. But now that's what we got. So we are using this one for now. So this is our preliminary wave forecast, okay? So I want to draw your attention to this trend line here. As I say to traders, the first wave is the signature of the bull in an uptrend. It's the signature of the bear in a downtrend. I'm looking for a nice color that you can see on your chart. So that trend line is broken, okay? All right. So now we're going to use the structure of that first wave. So here it is. First panel wave of the first wave. A tiny second panel wave of the first wave. 38.2%. I'm not going to measure it. If you disagree, let us know, and we will all come and bashing on you. All right. Fourth wave, also shallow. We call it 38.2% retracement. And also, this is the fifth panel wave of the first wave. The third wave is not the shortest Monty wave in comparison to the first panel wave and the fifth wave. So, is there any area wave violation? Any disagreement, my friend? Not bad. Okay, so far so good. So with that structure of the first wave, with this now we know that the second panel wave or the first wave is shallow. So we will say that probably this second wave will be shallow. That will be the first forecast. You can see that it's quite quick, swift. Is it swift? It has been here for some time now, since 2017. 1, 2, 3. So this is not giving us so much information. The only deduction that we can make about this second wave is that it's just shallow and swift. So this we will expect that this correction will find it. This is the first forecast. May find its support in the zone of $10.14. Will it do that? It does not have to. It does not have to. Now, sometimes the smart money, because they load it here, if they have not finished to load it, they may just say, okay, we want to buy more. All right, let me say, all right, so why do we have to buy $10? Let's bring it a bit below it. So we bring it a little bit below it before they buy it. But with the structure of this, the structure of the manual wave of the first wave, that's what we see now. Okay, so we can say that we can forecast and with that the second wave may be, not guaranteed, my friend, maybe shallow. Maybe just this. We will see. May change, may cancel even the first wave, and then we will start counting the first wave. But so far, with that, that's what we got. Good. All right. All right. You see that? So now we're going to go, we look at the third wave. You can see that the first wave is longer than the third wave. So we will say we're going to use now Fibonacci extension applied to the first wave. This is the first manual wave, the first manual wave of the first wave. We apply Fibonacci extension to that. Try to use a very conservative measurement here. And we want to see where did the... I'm putting it all the way to the top of the candlestick bar. I'll put it to the closing price to use a conservative measurement. Okay, so here it is. All right. Okay. It went almost to the 200%. You see here is the 200% Fibonacci extension level. Okay, so it's the third manual wave of the first wave. You need to concentrate. If you're falling asleep, go and sleep fast and come back tomorrow. You are not allowed to sleep in a classroom, my friend. All right, so here it is. This is a YouTube classroom, okay? So this is a 200% Fibonacci extension level of that supposed to be first wave. If I move it to the top of the shadow of this candlestick bar, we will see that it's a little bit below that 200% level. All right? So somewhere near the 200% level is our third manual wave. With that information, all right, looking at the structure of the manual wave or the first wave, we will be forecasting today with what we got today. We will be forecasting with a question mark on it that, all right, the third area wave, if this is just the first wave, will be ending somewhere here at the 200% Fibonacci. I'll remove that there. At the 200% Fibonacci extension level in the zone of $29. It's an extended third wave because it goes above the 161.8% Fibonacci extension level of the first wave. Didn't we say that before? So this is a kind of a revision also for some traders and some... we are doing a full Monty. Do you like that word? Or is it bad to use that word in English? Let me know in the comment section. Are you thinking that, Joe, you can use that word? All right, okay. My apology to traders who think that I shouldn't use full Monty. Just remember that what I meant by that is that a thorough, okay, accurate area wave forecast or analysis. All right. So we will be forecasting using the structure of the manual wave or the first wave, that if the second wave is stopped here and did not cancel this wave, this first wave, or if this is truly the first wave and the fundamentals are solid, and the market environment, looking at the S&P 500, the market indicators, crude oil, gold, and Japanese yen, and okay, the market leaders, all right, and everything is good. Talking about the tax cut in the United States, and the market sentiment remain bullish throughout 2018 and onward, hopefully, all right. Or AMD is making a lot of money, gaining more market share, beating all the competition, hands down. Our third wave can go up to $29 or maybe short of it, somewhere a little bit below it, as I did the demonstration earlier on. So in that zone, that will be our forecast, yes or no. Now, looking at the fourth wave here, using the structure of the fourth wave, is also sweet like the second wave here, there was no alternance between the second and the first wave, just one candlestick bar. So normally the fourth wave will be shallow. Also something like a 38.2% Fibonacci retracement of the third wave itself. All right. So we will apply a Fibonacci. So this is our projection of forecast for the third wave. So we'll apply Fibonacci a retracement, correct, to our projected or forecast third wave. If we get there, that the fourth wave will pull back to 38.2%, somewhere there in the zone of $22. So it was 21.77. That's the 38.2% Fibonacci retracement level of the third wave, somewhere there. And looking at the fifth wave, which is just boom, like this, how do we handle that? Again, we can use a Fibonacci. You see, we are talking about Fibonacci a lot, isn't it? All right. But this is, in fact, what we are doing. We are using a fractal pattern. The fractal pattern of the first wave, we are expecting it, okay, to extend itself during the Monty wave. This is a fractal trading, using the structure of the first wave to forecast the Monty wave. All right, this is what we are talking about this year, using predictive fractal pattern, not fractals. Fractals is about candlestick fractals, but a predictive fractal pattern, we are talking about Mr. Benoit Mandelbrot. I say, Joe, you always talk about Mr. Benoit Mandelbrot. Who cares about Mr. Benoit Mandelbrot? Because he's the father of the predictive fractal pattern. He's done a great job to help, okay, the financial market. All right, most of the trading software, or what they call quant trading, or all the rest, they use the fractal pattern, talking about the predictive fractal pattern. So our forecast for the fourth wave will be somewhere in the zone of $21.77. I need to remind new traders, though this is a bit exciting for a lot of new traders, is just okay, having a bit of idea what is likely to take place. It doesn't mean that it will definitely happen. The price can just come down here and you'll be warning that, George, I will unsubscribe to them, and I never see any useless area wave analysts like used before. But this is just an expectation. Remember that, okay? So what are we going to do next? All right. Stay with me, please. All right. We will now apply what? Fibonacci extension to the third wave to know where the fifth wave has ended in comparison to what? The third wave. That's what I'm doing now. You want it to be accurate, isn't it? Did I use the word accurate? Follow Monty, accurate, yes. Should be accurate, yes. So I put it all the way to the top and all the way to the low, and our fifth minor wave off. Okay. The third wave has ended just a little bit above in the zone of 138.2% Fibonacci extension level of the third minor wave of, all right, the first wave. So with that, we'll now from there, we'll apply now the Fibonacci extension to our forecast third wave, and we will highlight, here it is, this level here. This is 138.2% Fibonacci. Am I doing anything wrong? Okay, to the third wave, yes or no? Yes, that's it. The third wave, 138.2%, in the zone of $36. What can you deduct from that? If that is the case, what can you deduct? If you come all the way like this, to this point like this, what can we deduct? We deduct that this is not a proper trend because it didn't go above this high here. We'll call this one X, yes or no? If you stop here, we'll see that it's not looking good. We should have a new higher high. So it just, if you stop here, it's just a gigantic consolidation. It goes up to the pink line, come down, go back to the pink line. Here it is down. Now it's going back again to the pink line, isn't it? So we will say that fifth wave will end in this zone here. So here it is. This is our forecast. The smart money, if they want to sell here, they will prefer to sell at a better resistance level, which will be this zone. Instead of $36, they will say, okay, why don't we push it at $41.61? You stupid retail traders, why do you want to sell at $36? One must always sell high like the smart money. So when it comes to $36, though our forecast is here, we will be saying, all right, the smart money may push it here. So if you want to sell here, you will be very careful. Though your forecast is telling you here there is a better resistance ahead. But you see now, so this is a forecast at this junction, yes or no? And also we can say that if it stops here, it may be a next wave. But there's another scenario that we need to look at, because the price may do exactly as we're expecting like this. So first wave, so divided into 5 waves. We use the structure, the fractal pattern, the predictive fractal pattern, the first way to forecast the third wave, the fourth wave, and the fifth wave. Now we are here. Now, another scenario that can happen, though our forecast is like this, you see now, it's like this, yes or no? How can we extend, you see, that's what we say, the fractal pattern at infinity pattern? Can we use that? The breakdown into the infinity. So you see now we use this structure. Now you say, all right, I can hear. What's the fish again? That move, 1, 2, 3, 4, 5. Anytime we call 5, how do we call it? We call it 1. In Elliott way language, 1 plus 1 plus 2 plus 3 plus 4 plus 5 equal 1. So 1, 2, 3, 4, 5, 1. That's what we do. 1, 2, 3, 4, 5, 1. Don't miss that. Remember that. On any time frame, 1, 2, 3, 4, 5 becomes 1. If it's not violating the Elliott way principle. So at this junction, though we were talking about X wave, the next thing that we can do, talking about how to perform a full Monty accurate Elliott wave forecast or analysis, here we will call this a Monty wave, and the Monty wave is become 1 again. So because we're on a monthly chart, we will say to people that, okay, color you black, that's the black belt, Shotokan. Or Taekwondo, South Korea Taekwondo. All right. Are you from South Korea? Let us know in the comment section. If you're not careful, I'll kick you now with Kakatogiri. Kakatogiri is Shotokan kick. I've done Shotokan when I was young. Okay, Kakatogiri. All right. Don't be afraid. I've done it for years. I forgot everything. All right? You don't need to be afraid of me now. This to cheer you up a bit, because I've been talking to you now for some time, so to let you for 30 minutes, to let you breathe in and breathe out, or take a break and come back. So now that we reach this level, what can we do? You remember? The fractal pattern are infinity patterns. So therefore, as this become 1 again, we can do the same thing again. What do I mean? You remember that we were focusing the second wave to be shallow. All right? So if we did exactly what we did, and we call this one 1, we will expect again. We use again this one, this structure here, the fractal pattern of the first wave, and expect again, you see, for this move from here all the way up here. In fact, I'll do it now. Talking about a higher degree wave count. So this 1, 2, 3, 4, 5 will become, okay, the first wave of a higher degree. Though it is a multi-wave or a trending phase on a monthly chart, it will become the first wave of a higher degree. Are you getting confused? If you are, don't worry. If you're a new trader, take it one step at a time. You need to learn about higher degree wave count at the 24elliottwave.com, and slowly you understand what we are talking about here. All right? Okay. So therefore, because we were expecting the second wave to be 38.2% again. We'll do exactly the same thing here, using again the Fibonacci retracement applied to our new first wave. This is our new first wave, the black one here. And we will expect our second wave of a higher degree using the predictive factor of the first wave right here, expecting it to come down to this level. And we will do exactly the same thing, expecting the third wave to go to the 200% Fibonacci extension level of this first wave of a higher degree, expecting the fourth wave of a higher degree to be 38.2% level of the third wave, the forecast third wave of a higher degree, and we will expect the the fifth wave of a higher degree to go into 138.2% Fibonacci extension level of the forecast third wave of a higher degree. So we can do that to extend it over and over and over again, which means this pattern here, or this first wave, has extended itself into the future, like this, and then again it's extending itself again into the future. The fractal is expanding throughout the years. All right, this is what we can forecast at this junction. All right, you see now, but like I show you now, so the first forecast we did stop here. So you can take a snapshot of it, save it, all right, save it, or keep it on your chart, and then you do the second forecast, which I'm talking about now, the higher degree, the black one here, the higher degree, and then you do again that forecast, and then you save that, you put it aside. What usually takes place, sometimes the price will do all kind of blah blah blah. It may come back down here, it may do a consolidation, it may go back down, it may do all kind of things, and a few years down the line, here we are, that pattern that we have forgotten about. Now, market sentiment become, so now suppose that the market becoming bearish, now the trend has failed, and it didn't happen as you expected it. Don't forget your forecast. Save them somewhere or leave the line on your chart and keep eyes on it. The primary to work on it. And a few years down the line, as you have forgotten everything, here it is, doing exactly what you have forecast years ago. All right, so save it and keep it, all right, somewhere if you are a specialist, a trader for this stock. All right. But at the end of the day, in this scenario, talking about a full Monty accurate Elliott wave forecast or analysis, you must combine the technical analysis and the fundamental. You perform Google Asset test, you check the economy news, you check the peers, you check the market leaders, you adhere to the trading triangle, all right? Everything else, you take them into consideration. The S&P 500, where are we now? Paying attention to the market itself. And most importantly, are they making money in this company? Are they gaining more market share? Are they more likely to go up? So watch the trading volume as they load it here. Check out. You see here, if we see another surge in trading volume coming to the same level, well, if the price after that second, so there is a first surge, second surge. If you bring it to the same level, we'll be thinking that probably the smart money is giving up on this stock. Now, if they are giving up, be patient. Pay attention to the price and trade the price. Concentrate on the market pattern. All right, so you may say to me, Joe, what's the point of having the RSI on your chart and you are not talking about it? I did talk about it a bit, my friend. I said that the RSI exhibits a new high. Very often you see that during the first wave. Is alerting that a new trend may start. Can you see this one here? No, I'm speaking with my funny accent. You see, significant peak. I talk about this at day portrait, significant peak, alerting that possibility a new trend may begin. So you may say, Joe, look at that. Many years before, but this peak here is alerting about this move. So many years people wait, the RSI give us a leading signal here that probably we may have a new peak soon, a new trend. Blah, 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 blah. 3 years later, here is the trend. A significant high again. Is it going to be another 3 years before we see the trend, or is it going to happen straight away? All right, where is the RSI now? The RSI is at 36, going to the oversold zone. The volume is good. Where is pulling back gently? Will they find support at $10.14? Oh, it's retesting the top. George, I love you. Now I'll go and buy and hold because of what you said. I did not say it. All right, this video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. Sometimes I notice it, all right, sometimes today they watch a video like this and they go and place a trade and they lose. And they come back and they mark the video down because they lost money. Well, in trading, there will be winning trade, there will be losing trade, my friend. So you need to be careful. This is an educational tutorial, essential tutorial, explaining to traders how to perform perform a full Monty accurate Elliott wave forecast or analysis. But at the end of the day, before one is putting money onto it, all right, one must do other verification, fundamental analysis, and this is a personal decision. It has nothing to do with this tutorial. I hope this video has been truly useful to you, that you have found it truly useful. If that is the case, let us know by giving us your beautiful thumbs up. All right, we really appreciate those beautiful thumbs up. Okay, if you think that, all right, I'm not very impressed with while you are trying to call full Monty accurate in your forecast or analysis, mark it down. All right, you have any question or suggestion? Okay. Alright, or disagreement, put in the comment section, and in due course I will be recording another video to answer your specific question. Alright, if this video has been, you think that this is an essential tutorial that can help other Elliott traders, feel free to share it with your friend on Google+, on Twitter, and also on Facebook. So as you can see, we may have X wave, or it may fail completely here. We may go back into consolidation. Or another thing that you do not want to forget, remember other traders that are using this one as a fast way. So going deeper to avoid that, you can use this one also. The structure of this supposed to be the first wave, which I disagree, because you can see that this is supposed to be third manner wave of the first wave is the shortest impulse wave. But I understand what has happened here, but this was a fast wave, by the way. This was a fast wave. Alright, so we understand that something they are calling the fast wave, second wave, and they are expecting a third wave here. So they will say, oh, okay, first manner wave of the third wave, second manner wave of the third wave, third manner wave, the third wave, fourth wave, third manner wave, third wave, and so on, and then fourth real fourth wave, followed by the fifth wave. So apart from our two forecasts that I already talked about, go into the mind of those traders that are calling this first wave and try to do their forecast for them. Have it also aside and pay attention to the price. So at the end of the day, you do not lose, because the first rule is not to lose, and the second rule is not to forget the first rule. If you have not yet subscribed to our channel, this is the best moment to subscribe to our channel. Please subscribe to our channel today. We really appreciate you subscribing to our channel. All right, make sure you click on the notification icon, so whenever we record a video, you will be the first person to be notified. So this will conclude our discussion today about how to perform a full Monty accurate Elliott wave forecast or analysis. Until the next time, enjoy yourself and be very happy. We are the GSTW 24 traders. Happy to meet you all and speak to you as soon. The financial instrument that we are analyzing today is AMD Advanced Macro Devices using the Elliott wave principle. Thank you for watching. So as I said before, this is a long form video, 42 minutes, a little bit above that 30 minutes. Well, there will be some short video. There will be a long form video. This is a long form video. My apologies to traders that want it to be short. Next time, I'll keep the next video shorter than this one. Happy to meet you all and speak to you as soon.